All right, today we're jumping into a real classic investment puzzle in Mont Kiara, i-Zen Kiara II. It's one of those properties that pretty much every investor in the area has an opinion on, but for totally different reasons. It's well known, it's freehold, but man, is it complicated. So, let's get into it. And really, all that complexity, it boils down to this one single question. Is this place a total gem because of its unbeatable location? Or is it actually a trap because of its legendary, soul-crushing traffic? This is the core conflict we're here to figure out. So that's what we're going to do. We're going to break this exact dilemma down piece by piece, digging into the data to see where the real opportunity is and what the real risks are. First up, let's talk about the big one, the undeniable heavyweight advantage this property has, the very reason it's still a major contender after all these years. And that is its incredible, incredible location. I mean, the convenience factor here is just off the charts. We're not talking about a short drive away, no. We are talking about a 2-minute walk to one of the area's best lifestyle malls. 2 minutes. And it's not just one mall. A 9-minute stroll and you're at another major shopping hub, one Mont Kiara. In a city like KL, having this kind of walkability is honestly like finding gold. It's so rare and so valuable. But the appeal goes way deeper than just retail therapy. The real secret weapon? It's right next to top-tier international schools like MKIS and GIS. That creates this constant, built-in pipeline of expat families who need a place to live. Then you add in these really unique Soho and Lanai layouts, which are basically an apartment with a separate studio attached, plus hotel-style services, and boom, you've got a product that is perfectly designed for this high-demand rental market.
Okay, but here's where the plot thickens. For every huge advantage i-Zen Kiara II has, there's an equally significant drawback. So now we've got to flip the coin and look at the serious problems that hold this property back.
And this quote, wow, it just says it all, doesn't it? This isn't just a minor, oh, traffic is a bit heavy situation. The analysis uses words like crippling and nightmare for a reason. The building is planted right at the entrance to Jalan Kiara, which puts it at the absolute epicenter of Mont Kiara's infamous traffic jams. And this, right here, is the central paradox. By car, you have fantastic access to all the major highways. But public transport? It's practically non-existent. The closest MRT station is over 2 kilometers away, completely unwalkable. This basically cements its status as a 100% car-dependent property, which is a huge risk in today's world. Now, on top of the traffic mess, there's the age factor. This building was finished way back in 2005, making it a first-generation Mont Kiara building. And what does that mean for an investor? Well, it means you have to plan for higher maintenance costs, and you have to face the hard reality that you're competing against a never-ending stream of brand new, shinier condos popping up all the time. So, how does this epic battle between a great location and some really serious drawbacks actually play out when you look at the money? This is where the story gets really, really interesting for an investor. The good news, and it is good news, comes from the cash flow. An estimated gross rental yield of 5.2% is solid, no doubt about it. That is the direct financial reward you get from that amazing location and that powerful demands from expat tenants we talked about. The rent just keeps rolling in. But, and this is a huge but, while the income is steady, the capital growth is anything but. I mean, look at this. Depending on which data source you trust, the price either shot up by almost 10% or it dropped by 8.5% in a single year. That massive gap between the numbers, that screams market uncertainty and a whole lot of volatility. So why those wild conflicting numbers? This is exactly why. It means that making a profit when you sell is absolutely not a guarantee. Your potential profit is totally dependent on the exact price you paid to get in, the specific condition of your unit, and even which direction your windows are facing. This is what happens when value isn't about the whole building rising together, but about the individual merits of each separate apartment. Okay, we've seen the good, the bad, and the downright volatile. So let's pull all this together into a clear final verdict. Who should actually be considering a property like i-Zen Kiara II? The answer is, this is a classic buy for yield play. All that means is you are buying this property for the rental income, period. You're not banking on flipping it for a huge profit down the road. The money is made from the monthly rent, not the final sale price. And that paints a really clear picture of the target investor.
You're the right person for this deal if you're all about strong, consistent cash flow from a proven rental market. You aren't chasing some massive price jump, and you understand you'll need to set aside money for renovations. And crucially, you can live with that daily traffic nightmare as the cost of doing business.
Which brings us right to the final question you have to ask yourself. Is having access to that guaranteed, high-quality tenant pool worth the trade-off of owning a property stuck in a daily traffic war? For the right kind of investor, the answer is absolutely yes. But for everyone else, it's a very clear warning sign.